Good morning, this is Rich Pazin. It's 8:38 a.m., March 27th. Let's talk about the corn market. We're going to start out with the daily chart to take a look at what's going on with these intra-month trends of buyer-seller interest. At any rate, we made a call here this week that back on March 20th, the market topped for an L3 trend. So buyer interest only showed up for less than 2 days, following several days of seller interest. Since then, the market is basically just treading water. It's turned very quiet, low volatility, which is a warning that it's not going to stay low volatility. Something's going to wake this market up and shake it one way or the other. Currently, we believe as starting Monday through next week, a level 3 bottom is due, so the market really should dip and go down. So we think it should come back and test the low of March 24th around 344, but we're of low confidence because we're wondering why is the market so quiet this week. Clearly, both sides have stepped aside and are just watching, thinking, evaluating. This indicator is not overbought, but it is of narrowing spread, which is a bit of a warning. It's losing upside momentum that the next move could indeed be a sell signal and a little bit of decline. Now let's look at the next larger trend. So this is a weekly chart, and by the way, this is the July corn futures. So those level 3 trends that we're looking at, we're just creating pops and drops within inside of these larger level 1, level 2 trends that are also buyer-seller interest, but also can have a better correlation with fundamentals or the development process of fundamentals progress, and therefore can be the larger trends during the year and reflect supply and demand, not just buyer-seller interest. Anyway, we've warned that the market's in a level 2 downtrend. For the bulls, we're hopeful we're going to find out it's actually a level 1 bottom due sometime week of April 6th to May 4th. If it is a level 1 bottom, then we have an opportunity to rally into summer for a weather scare. If by chance it's level 2, we're probably going to see a little bit of a bounce into a level 2, pull back, and we won't get a significant low until we get into summer, which may mean this is not going to be a good year on the bull side unless we actually had a good sizable crop problem. At any rate, you can see this week is definitely inside weak, lower volume. It's really not doing much of anything. A weekly indicator is trying to turn towards the sell side. We think there's lower prices to come. It could violate that 338 target that worked quite well. They immediately bought when it came within a quarter cent of that, and then they have since just kind of moved to the sidelines. We're not saying the market will go to a new low for the year. It is oversold, and it's certainly acting reluctant, and it's just basically in kind of a watch mode. So we may just see choppy range trade going into this level 2 or level 1 bottom in the next few weeks. We just can't rule out at least a minor new low into the low 330s to upper 320s for the July corn futures. At any rate, not a whole lot to say here. We'll obviously reevaluate next week, but we think this market needs time to build into a seasonal and cyclical bottom. As always, manage your risk relative to the analysis of others.